India is the perfect emerging market. That's according to our next guest here on IGTV. Let's catch up now with Kevin Carter, Chief Investment Officer and founder of EMQQ Global, a privately held investment firm focused on emerging and frontier markets. Kevin, welcome.
Thank you.
We've already spoken to you about your emerging market exposure on a broad basis, and we thought we'd further question you about what's going on in India. And as I said at the top, your quote that India is the perfect emerging market. Why?
Well, the reason India is the perfect emerging market is pretty simple. I mean, if you look at the reasons for emerging markets, like why are people interested in emerging markets to start with, there's basically four things. Emerging markets have a lot of people. They have a better demographics, so the people are younger. They have faster growing economies, and that's driving a boom in consumption. And if those are the reasons that you're interested in emerging markets, it's not really debatable. I mean, first of all, India's got the largest population in the world ever today. It passed China a year ago. Now, China's demographics aren't great, and India's are very, very good. So tomorrow, India will be the largest country the world's ever seen. The day after that, it'll set a record. And every day for the next several decades, on that day, India will be the biggest country the world's ever seen. So, and if you leave out China, India is bigger than every other emerging market combined. The next biggest country is Indonesia with 275 million people. So this can't really happen again. So it's by far the biggest. It has 730 million people under the age of 30, which is twice the U.S. total population. So it's the biggest, it's the youngest. It has the fastest growing economy. The estimates for this year are 6.5%, which is at least double anything in the developed world, and they've beaten that estimate the last 3 quarters. And the most recent quarter, they reported 8.4%. So they beat the estimate by about 2 points. I believe that the estimates are going to be raised. I believe India's economy may be accelerating, at least it has in the last 3 quarters. So it's the biggest, the youngest, the fastest growing, and that's driving a boom in the middle class, just like we saw in China. And when you take all those numbers together, India's consumption is expected to pass China's by a pretty meaningful amount within the next 25 years. So if those are the things you're looking for, not only does India have them, India has them at a scale that's never been seen before and won't be in any of our lifetimes.
And of course, it's a democracy, which we always talk about, the fact the most populous country in the world with a democracy.
Yes.
I mean, obviously, that goes without saying that's important. But at the same time, Prime Minister Modi has an iron grip on politics at the moment, going through an election, widely expected to win. So a certain stability comes out with that. Do you think there is a concern about that dominance and the fact that he's not being challenged? Do you see that he's able to steer the economy further down that route that you've been highlighting you think is an advantage?
Sure. Well, Modi is the most popular leader on the planet today. He's got an 80% approval rating. Sure, there's groups that don't like him, but he's getting the job done, and he's finally bringing capitalism to India, and he's running the country like a business. Sort of as Deng Xiaoping unleashed capitalism in China, so too is Modi now in India. Now, he's had to deal with a ton of bureaucracy, a lot of socialism, and he's been doing everything he can to streamline things, simplifying the tax code, updating the 100-year-old bankruptcy laws. But the most important thing he's done in the first 10 years is he's doubled the entire country's infrastructure. Whatever they had in the first 65 years, whether it's miles of roadway, number of airports, every one of those metrics has doubled in the 10 years since Modi's been in charge, and they're not even close to done. They've got another $1.5 trillion earmarked for a comprehensive overhaul of the country's infrastructure. That the British left a lot of train tracks, so they've electrified most of them. They're making their own high-speed trains. They're connecting the cities, updating the stations. They are going to triple the number of airports in the country. One of the first luxuries of an emerging market consumer is to get on an airplane for the first time and go visit some other part of the country. Hundreds of millions of Indians will get on their first flight in the coming years, so they're tripling the number of airports. They're working on the deep sea ports so they can load and unload boats, which they're going to need if they're going to get jobs, manufacturing jobs from China. And that will happen. The U.S. and other countries and the corporations are looking to diversify their supply chains out of China, and India will be a big beneficiary of that. But they're going to need that infrastructure to catch up in order to really compete. So, and Apple, for example, is going to make 25% of their iPhones in India by the end of next year.
What you talk about is actual concrete infrastructure, if you like. What
Yes.
about the digital infrastructure that's owned by government in India? What are they doing to promote that?
Sure. Well, one of the other big advantages that India has is first of all, it has a technology sector that's 50 years old and self-made billionaire founders and an ecosystem with hundreds of thousands of technologists that have worked for these companies like Infosys and Tata. And part of the benefit of having that is this digital public infrastructure, because what India has that I think is a real secret weapon, and I don't think that I know this because I talk to a lot of investors. People don't really understand this last part of the India story, which to me is a secret weapon. And it's a digital public infrastructure that they've built, led by the chairman of Infosys, who took a position the government offered him. And the way it started was this. They call this the India stack. So digital public infrastructure is part of all of our lives, but we don't think of it as digital public infrastructure. The internet is digital public infrastructure. GPS is digital public infrastructure. You know, we didn't make these things, but we use them every day. But they're digital and they're public and they're behind the scenes, though. So those are the types of digital public infrastructure we're familiar with. This man, Nandan Nilekani, has led the development of several homemade versions of digital public infrastructure for India. And the base of the stack, because if you drew a picture of it, it's a series of programs. The foundation of the stack is called Aadhaar. Now that word means foundation. So the basis of this is an identity layer. And what happened was in 2009, the government decided they had to give everybody in the country a national identity card, a physical card, like a driver's license with every person's photo and their name and information, and then their own 12-digit number. Because one of India's problems in developing was nobody could prove who they were. And there's a lot of things that are hard or impossible to do if you don't have identification. Only 40% of the Indians born had a birth certificate. So it was sort of a free-for-all. So they wanted to start this program and give these national identity cards, and they asked one of the founders of Infosys, the chairman, Nandan Nilekani, if he would lead this program. And he agreed to lead the program, but he said if he was going to be in charge, they were going to use a lot of technology and they were going to look to the future. And not only would they give everybody a physical card, but when they were enrolled, they would also have their fingers scanned and their eyes scanned so that every 12-digit number could be tied to a human. Okay, now they launched this program in 2010. It was totally voluntary. And then in 2014, they added another layer of functionality to the Aadhaar identity layer, a know your customer layer. And they started a program and they said, if you're in the database, you can walk into a bank and in 2 minutes, just by putting your fingers down, open a digital bank account. And they've now have 95% of the population in the database. They've opened 800 million digital bank accounts in the last 7 years. So you've taken almost 1 billion people that were not included in the financial system, whose entire financial life was paper-based currency, and you've digitized them in 7 years using this genius identity layer.
The ultimate nudge economics, isn't it, really, to urge people to adopt a certain layer of control. It has to be said, but it is to their advantage. Let me just quickly take a look at the chart here, the INQQ. India Internet and E-commerce ETF. It's going in the right direction. It's not very old, it has to be said. It is just a matter of less than a year old. Explain what it's made up of, what people will buy into, what they get exposure to if they buy into this ETF.
Sure. So you're right. The chart for the UCITS version, or European version of this, is relatively newly launched. We have a US version that's 2 years old. But let me tell people, the Indian internet companies had a bubble that burst, and it burst in November of 2021. A few months before we launched, India's internet stocks were already kind of in free fall. Now, they didn't have any internet companies 5 years ago. There was 25 IPOs. There was a little bit of a frenzy. and they had a big correction. The last 12 months have been quite strong, and we've had a little bit of positive movement here in this short-term chart. So what we own are the same kind of things that people probably have on their phones. Here we have the travel app of India, Make My Trip.
Yep.
InfoEdge, which does online job ads and online real estate ads. Zomato, which is a food delivery company, which has been one of our best performing stocks. Online insurance was a company called Policy Bazaar. Payments is a company called Paytm, which Berkshire Hathaway was an investor in. Online gaming. So it's all this, the same sort of things that other people all over the world are doing, but it's the local version. And again, there's 25 of these companies today, but there's a very big pipeline of IPOs. India may have 100 internet IPOs in the next 5 years.
Yeah, that's incredible, which of course you'll be presumably exposed to as the time goes on. Do you have much money coming on to the balance sheet that you can invest? If you are, what sort of companies are you looking to get more exposure to?
Well, yes, we've had a lot of flows in the United States. Again, the fund here is relatively new. And, again, we follow the same methodology we've always followed, and it's pretty straightforward. We buy all the publicly traded internet companies. There are new ones coming. There's Reliance Jio has spun off its financial services unit, for example. So that was our most recent addition. But it is, I believe quite strongly, that if you want to get exposure to the long-term growth of India, this is exactly what you want. These are all domestic-focused companies. One of the problems with the big index is that a lot of the biggest Indian companies don't get their revenue from India. So if you buy the traditional India ETF, you might not be actually getting the exposure to the growth of the true growth of India.
We've got to leave it there, but thanks indeed for joining us. It's a quick tour around your Indian exposed ETF. Thank you.
Thank you.
Time, Kevin. It's Kevin Carter, CIO and founder at EMQQ, global privately held investment firm focused on emerging markets and frontier markets, including India.